Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar has launched a counterattack, stock indices can't stop breaking records, geopolitics is helping gold, and Bitcoin is recovering. Political crises in France and Japan have undermined the strength of the US dollar's main competitors, the euro and the yen. Geopolitics has also played a role in the rise of the USD index. By announcing his readiness to impose sanctions on China and India for their complicity with Russia, Donald Trump acknowledged that the armed conflict in Ukraine is far from over. The resignation of the prime ministers of France and Japan has allowed the dollar to forget about monetary policy for a while. The chances of further steps to ease the Fed's policy are growing rapidly after the BLS's record revision of employment data for the year to March, which took 911,000 out of previous estimates, as well as the unexpected decline in producer price indices for August. The greenback is getting a boost from a federal court ruling allowing Fed Governor Lisa Cook to attend the September FOMC meeting. Donald Trump wants to weaken the US dollar. Therefore, any blow to the president serves as a signal to buy the American currency. This also plays into trading strategies that focus on the Fed's independence. Thanks to an impressive rally in Oracle shares and market confidence in the imminent resumption of the Fed's monetary easing, the S&P 500 managed to post its 23rd record close in 2025. The software provider pleased investors with positive corporate reporting and big plans. Its shares soared 36% in one day, the best result since 1992. There are rumors that Oracle could become the new NVIDIA. For now, the company has risen to 10th place in terms of market capitalization. A cut in the federal funds rate could turn September from an ugly duckling into a beautiful swan. The first month of autumn is historically considered the worst for U.S. stocks. However, when the Fed eased monetary policy outside of recessions, the S&P 500 most often rose. This was the case in September last year. At that time, the central bank began a cycle of monetary expansion, and the broad stock index rose by 2%. Expectations of a Fed rate cut have pushed two-year U.S. Treasury yields to their lowest levels since 2022. This reduces borrowing costs for S&P 500 companies and improves their financial results. Gold reacts strongly to geopolitics and has reached another record high. The sharp increase in the correlation between the precious metal and the ruble indicates that the thaw in relations between the US and Russia is coming to an end. Washington is ready to wage economic war on the Kremlin's main allies, India and China, if Brussels supports it. As a result, there is an increased risk of central banks stepping up their gold purchases as part of their reserve diversification and de-dollarization processes. Geopolitics has made the precious metal less sensitive to the Fed's monetary policy. Gold prices fell unexpectedly when the chances of a cut in the federal funds rate in September and at the next three meetings increased. Even the revived US dollar was unable to put a spoke in gold's wheel. Neither did the White House's announcement that it would exclude this asset from the list of potential tariffs. If Donald Trump manages to sow discord between Russia, India, and China, oil prices will rise, and inflation will accelerate. A stagflationary environment and increased central bank purchases of bullion will help gold. Bitcoin is gradually recovering after falling in late August. Declining volatility and corporate treasury issues pushed Bitcoin quotes to their lowest level since early July. Nasdaq required companies to acquire digital assets first to obtain shareholder approval, and then issue shares for these purposes. This could slow down demand for cryptocurrency, which is already falling. While companies purchased 66,000 Bitcoins in June, they purchased only 14,800 in August. The average volume fell to 343 tokens, which is 86% less than at its peak in 2025. Despite the decline in volatility, Bitcoin remains a risky asset. Therefore, the ongoing rally in the US stock market has inevitably influenced it. Deutsche Bank expects the S&P 500 to reach 7,000 later this year, supported by US leadership in artificial intelligence, a resilient economy, and tariffs that are already largely priced into inflation. If this outlook materializes, Bitcoin bulls could regain the upper hand. The third week of September will be a showcase for central banks. The Federal Reserve, the Bank of Canada, the Bank of England, and the Bank of Japan will announce their decisions on key interest rates. The Fed is expected to resume its monetary easing cycle and signal its continuation for the rest of the year. Donald Trump failed to remove Lisa Cook, who also votes like Jerome Powell from the FOMC. However, the president's new nominee, Stephen Moran, has been approved by Congress and will be present. Could this lead to a surprise? The interest rate futures market is signaling expectations of 4 rate cuts at the next 4 meetings. A sharp deterioration in employment estimates and a decline in producer prices allow the Fed to move from expectations to action. Perhaps this is also a direct path to large-scale monetary easing in 2026 after Jerome Powell's retirement. This time, the Fed will publish forecasts for key economic indicators and the federal funds rate. Investors will carefully study the updated estimates, which could trigger significant fluctuations in various assets. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.